does look like a multi-generational family. Crucially, they are eating together. Our textbook tells us food sharing is really the foundation of human cooperation. It's how we distribute things around, interact with people. It's a hugely important way of understanding the world. So, sharing food is one of the main things that happened in the early days from the beginning of humans spreading out all over the place and trading things with each other and what we call an economy. Now, in today's world, the word economy and economics is more associated with math and moving funny numbers around. But really, the whole basis of it is back to these social and physical needs that we have. And it is not just that we fulfill our needs, our human needs for food and shelter and these things. It's a way of connecting ourselves socially to each other. It's okay to eat by yourself, but oftentimes you want to eat with other people or your family or your friends and make those social connections over a meal. So food is hugely important for how our society is structured, how we move things around, and really the basis for much of what we talk about is economic exchange. Now, the most basic form of economic exchange, and that often is connected to food, is something that we call reciprocity, which is how we give things to other people and how we receive things from other people, the give and take of human society. And again, we do not just do this as in, I want something because I need it. We're always moving things around and then attaching expectations to them or cultural meaning. So if we give somebody a gift, we usually expect some form of recognition in return. When we do reciprocity, it is the basis for and depends upon our social relationships. That is to say, it is the thing that moves people around and cements those relationships and keeps them going over time. When your parents or your uncles and aunts send you a card or send you a gift, your birthday perpetuates this social relationship. Or if they don't send you something, then you start to wonder, am I still having a relationship with this person? I gave them this and they didn't give me anything back. So this form of reciprocity and the expectations that we have are hugely important for our everyday life and are really at the basis, again, of what we call economic systems. Now, we'll soon be talking about forms of money and counting and those things. But in all societies, we find, and even those that are hunters and gatherers and don't really use as much counting and money, we find these forms of reciprocity. Your textbook divides or these forms into a kind of types of reciprocity. Now, these are labels for what is human activity. This doesn't mean that everything will sort neatly into one of these types. They are just things that people have thought about different ways in which reciprocity is organized. So our textbook mentions three forms or types of reciprocity. Generalized reciprocity, in which you're giving things, be helping somebody, and you don't expect them necessarily to pay you back. There's not going to be a payback point. There might be a thank you for sure, but it's not that this is going to be entered into an accounting book. Whereas balanced reciprocity is one in which there is some form that you are expecting something of equal value in return, some form of back and forth in which you get something or I give you something, and I am expecting, maybe at a later date, that you're going to repay me. And then there is this curious form of reciprocity, which is negative reciprocity, in which somehow you are getting something for less than its value, or someone is taking something from you and you're not getting anything in return for it. Your textbook gives us this idea that this is often based on social distance. So you have the household here. So you have in your household, you'd have generalized reciprocity, but when you get a little further away, say with your friends or in the community, you get more balanced reciprocity. And then the further away you get from people, that's when you have people that don't know each other and they might steal something from you or try to cheat you. And then you get negative reciprocity. And this is an interesting way to think about it. But oftentimes, I would say that some of that negative reciprocity occurs within friends or within even families. It can be harsh and it can be hurtful. It's not merely a matter of social distance that this happens, but it's an interesting way to think about it. Your textbook mentions that reciprocity in certain cases can be seen as a way of having social insurance in your group or in a group of people or in society. You give something to somebody and you create these good expectations along the line so that if you fall on bad times or if you're hungry or don't have any gloves, you've created a network of people who will feel nice to you again. We can talk about maybe your parents and are doing nice things for you now, but it's a form of social insurance as they might need something later on. You're like, yeah, I'll help you out. Social insurance, reciprocity. It's not like a bank account, it's not like buying insurance, but it is a form of having goodwill in the world so that when something happens to you, people do nice things to you back. So those of you who give little nice gifts to people as friends, you may not expect anything back, but hopefully they'll be nice to you if something bad happens. Your textbook gives you this nice little chart here about exchange systems and modes of production. We've been talking here about reciprocity, which is the oldest form of human exchange. It's this give and take, which we still see in our own society. It hasn't disappeared, but it crosses over into other forms of life, or it interacts with what we call market exchange. In the second section of this text, after we talk about reciprocity, they talk about markets, which in a literal sense are places where people exchange things. Now, these can be physical places, places where people go, a farmer's market, maybe a store, and you exchange things for money. Oftentimes in today's world, this happens a lot online. You have various marketplaces in which people get buy and sell things for money. In a market, you're supposed to give something in that instance. You might put it on a credit card, but that person is getting money or getting some form of exchange immediately. They are not expecting you. This is not, we mentioned some forms of reciprocity in which, oh, you'll get me back later. In a market or in a store, you don't get something and just walk out and say, I'll pay you later. You pay them then, and you use money, or a lot of times you use money as the medium. There are instances, and we could talk about how in different societies there are more bartering that goes on. So you might exchange corn for wheat or a cow for a pig, but in most contemporary markets, you're using money in order to exchange as the way in which you measure the stuff you are buying and selling. A market is always embedded in social expectations. So just because you have a marketplace doesn't mean you have left the realm of ideas about the market. There are many societies where, for example, it is customary or even expected that you would negotiate the price. that you might go have a back and forth. You walk into a market and they say, I want $3 for these oranges, and you say, I'll give you $2, and then you settle on $2.50 for the oranges. There are other places where the price is the price. You don't barter at all, or you don't negotiate at all. We have different ideas about what we should and how we should behave in a market. I want to emphasize that today, in today's world, and probably from a long time ago, most people, most of the humans of the world, including those people who are growing their own crops or hunters and gatherers, at least engage with markets. That is to say, they will trade things around, or they know what they are, and they will be buying and selling things. They may grow their own food for their own consumption, but almost everybody today interacts with a market. A lot of markets, or a lot of these things, grew up along what your textbook described as ancient trade routes, routes of trade that have been around for thousands of years. When humans spread out all over the earth, they were always interconnected and trading with each other, with neighboring societies. But some of these trade routes in Eurasia and Africa and the Americas became more durable. This is a really interesting trade route, which we've been learning about a lot these days. We forgot about the Strait of Hormuz for so long, and now we're like, what's going on there? It's a very narrow place there, and whoever controls it controls the whole, turns out, all of the oil. But this is from an ancient trade route from thousands of years ago, that ships and other things have been sailing back and forth here and over land to trade across the Middle East. And when you think about the explorers from Europe that we know about, like Christopher Columbus and other people, they were trying to get a handle on these ancient trade routes. They were trying to get this stuff from Asia by a different means, trying to avoid going through the Strait of Hormuz. So it's just interesting to see that, yes, after all these years, we're still fighting about a trade route that was opened thousands of years ago. We see along these trade routes various forms of money that have been used. We know that money that we have is coins and metal and eventually paper money and now digital money. But in other societies, people have used beads or shells or even cacao beans among the ancient Aztecs. You can use different forms as long as people agree that that is going to be the medium of exchange. That is going to be what we agree upon as having a value. So there's there's not necessarily any inherent value to money. Obviously, with silver and gold, we think of it as having an inherent value, but it's really upon how much we agree that it is going to be something that we can trade for another thing. And we believe that once we have that thing, we can get something else in return. Now, money is important for the development of our system of what we call capitalism. But we need to be clear about what capitalism is. A lot of people think capitalism is just getting rich through markets. And that is certainly true, but there are people in almost every society who have acquired wealth, but that doesn't necessarily mean they have created a capitalist system. In order to have a capitalist system, what it means is that you have private ownership of the ways in which you produce. So when you go get a job, you're usually getting it from somebody who owns that means of production, who owns the restaurant, or who owns that factory. Once you have private ownership, and then you are then reinvesting your money to make more stuff. So famously in the old days, if you got a lot of money in certain societies, you might give it all away or buy a title or get a castle for yourself. And certainly people do those things under capitalism, but there's an expectation that you are in some ways going to invest your profits in order to produce more stuff and to produce more, to make more money. So capitalism is a relatively recent economic system in the sense that we have had forms of reciprocity and forms of redistribution and other forms of running the economy up until around 500 years ago or so, where you have this emergence of a new form of moving money and people around for a capitalist economy. There are several different what we might call phases of capitalism. So those ancient trade routes and how people would move goods and services around, that is a form of what we might call merchant capitalism. So the profit you are making is you invest in a boat, you're getting some spices, sailing across the sea, and then you're hoping to sell those spices for a profit. So getting profit through trade. After that, we see the development of what we call industrial capitalism. You would have the people start to work in factories. This is usually known as the Industrial Revolution. You would produce things and you would get money for working in those factories, get wage labor. Many people believe that we are now in a new form of capitalism, which they call post-industrial, or that in some ways most people don't work in factories anymore. We still get our stuff from people who work in factories, but they are often far across the globe. In a post-industrial economy, it places a priority on information and services. So people who are able to get a job from providing information or consulting or various forms of accounting and services to other people. Probably most of you who are in college are not trying to get a factory job when you get out of college. You're trying to get something in the informational and services department of things. You're trying to be post-industrial. In today's world, this has been true for a while, you also have a form of what is called finance capitalism, where you seem to be able to make money or profit through simply moving other money around. This was perhaps most famously stated by a statement from U.S. Steel, the U.S. Steel Company, who said in the 1980s when they were selling off parts of their steel business, we don't make steel, we make money. The idea was, or is, that the purpose of having a business is not necessarily to give you a product, but to make money. And that is the goal of being in finance. This has probably reached crazy proportions when people will tell you to to buy things like Bitcoin or Dogecoin or some form of electronic cryptocurrency, and you're expecting to buy that and then make a profit later on. So it's a strange form of capitalism in which people are trading things around and making money off of what is in some ways, I would just call it speculation in forms of gambling. And we've reached crazy heights of this where you go to a football game, or you don't even go to a football game. You go to a bar and you gamble on the football game, and you're hoping to make money on whether the guy throws a 20-yard pass or not. So, where are we at in capitalism today? Many people in the old form of capitalism identified by their work. You were working in a factory, or if you were a farmer, that was your identity. A lot of people today don't identify by their work, they identify by their lifestyle, by the things they can buy, by the things they consume. Your textbook talks about body projects of capitalism, like influencers, people who can live simply from influencing other people to do things. This person must be a famous person that has a body project. But what we've been discovering these days, or at least is becoming more apparent, is that the information economy has grown to such an extent that in order to produce this amount of information, you need an incredible amount of energy, electricity, all those old energy factories. And that's why there are so many debates now about data centers and pollution and stuff like that. And I leave this as an open question because we have gotten to the point where we seem to be beyond the physical production of stuff and going into the information economy, the economy of influencers and finance. But we see now this resumption of the ideas of, wait a second, we need that energy. What is going to happen with the Strait of Hormuz and our gas prices, and how does that feed into the informational infrastructure? Again, I leave these as open questions, but we can see in terms of anthropologically the development of these ideas over time, starting with reciprocity. And reciprocity is still hugely important. We still have major holidays in which people are expected to give each other things, but we have reached a point at which the physical infrastructure, the stuff we have in trade, seems to be mostly electronic, but we're discovering that that still runs on an older energy economy. So, taking us back to our modes here of production, we have talked about this oldest form of reciprocity, and we've talked about markets and the forms of capitalism. In the next class, we're going to look at this idea of redistribution.